This is Ken Long at Tortoise Capital with a review of the weekend trading reports for October 15th, 2016. Market's bullish normal in the middle of the range for annual and 10-day lookbacks. There's been a pullback here in the 10-day down at 35. Looking at the market mosaic, price with respect to the 200-day moving average is white bullish. The slope of the 50 went negative into red bearish at minus 0.11. ADX is 23.3 neutral with respect to trend, but bears in charge. The risk index is the 30-period moving average of the VIX divided by the 10. 1.0 is the threshold between risk on and risk off. Current reading is at minus 0.986, so we are into risk off. That's a quarter of a standard deviation below the long-term average on the risk Z, which is when we take that score of 0.986 and compare it to the last 5,000 trading days as a reference. Here's a 90-day histogram of that indicator, showing that we rolled over slightly here at about 0.5 SD and I'm now dipped into the negative. This is a location on the curve that favors intraday trading and short-term profit taking on volatility spikes. It's not until it bottoms out and starts to crawl back up that volatility posture is improving. So this is a warning sign of shenanigans for the next 2 weeks as we approach the presidential election resolution. Everything gave back some this week. Latin America and Brazil gave back the less. In fact, Brazil was actually up while the U.S. and the other globals were down. So Brazil continues to be very resilient. In ETF Max, some things that are in the greens all the way across of interest: sugar, natural gas, Brazil small caps. There were some significant givebacks this 1 week in the red. So China Tech, Dynamic Semiconductors, small cap energy, more China. In the S&P 500, these are the top 40 or so based on their blended percentages. And nice rebound here in Chesapeake Energy, which has been brilliant. And then had a sharp pullback for a month and is now starting to outperform again. That makes it of interest already. The fact that it's able to reverse like that and is connecting back with its strong longer-term relative strength. That's nice. Same with Best Buy and Spectra Energy. So those would be ones that I'd be looking at. Apple is in the same condition as is Molson. Sharp pullbacks in other relative strength leaders that it would be of concern: Consol Energy, Semantic Corp. So these are ones that were great and now we're pulling back. So that's either a turning point and people pulling their money out, or it becomes a buy on dip opportunity. So when we start with these, the long-term relative strength posture, we can now look for extreme performances in the 1 week and 1 month, and that's the basis for making some tactical frames. This is really 30 days of sideways chop after this 1 day of downward pressure, and that really makes it 60 or 70 days of just sideways chop. We've been saying all along that until the politics is resolved, that this is the most likely scenario, and that's what we've gotten. It's definitely got a downward twist to it. You can see that the 200 is chugging upwards while the market is holding steady. That's a sign of longer term weakness. And the slope of the 10 channel is down, the 30 channel is down as we get closer and closer to elections and the dirty tricks continue to roll in. Latin America remains very strong. Inside the U.S., well, they have the S&P at 40 compared to 41 in EFA, so the globals are slightly favored over the U.S. Inside the U.S., it's tech at 48, and small caps at 44, followed by the mids and the large caps. U.S. tech at 48, and Latin Latin America at 55 are the strongest. The S&P at 40 and IEV at 38 are the two weakest sectors. In the globals, again, most of the U.S. under the long-term averages. Selected strength here in Asia, but really it's Latin America, emerging markets, Brazil, kind of large enough to be able to accept temporary money coming out of the U.S. and maybe Asia. Europe generally below average. ETF 2 lens finds the same things: natural gas, Brazil, Latin America, Hong Kong. You see how volatile the oil has been. Consistency, it's in the red, but on strength, relative strength, it's in the white. So you got to play that one very short term. Hard to play that with long-term positions. India and Asia less Japan are white and green, meaning that some of that strength is coming out of them, whereas ones gaining the strength are the commodities, short-term high-yield bonds with white and yellow. In the Dow, mostly red and below average, so limited strength can be found in Apple, Intel, Caterpillar, Morgan back up on top, and Merck. Otherwise, it's pretty gloomy. Shifting to the daily now. Lots of choices in channeling and overreaction and 5DD. And the auto framer has plenty to choose from, aiming at the 10-day high. Walmart at 5.3 to 1 on the auto framer. Plenty of dojis. And the 5DDs and Pfizer and American Express look attractive because they test out really well on the auto framer. So let's take a look at those charts real quick. This is Caterpillar has emerged from that sideways quiet channel with an expansion. That's why it was near the top in the Dow. Had that orderly pullback and now is moving again. I would play this one with a, if it gives us that move, then I'd be looking at first target around 90-ish. And then on the downside, if it collapses below here, I still like this at 84 as a target. And about 92 on the upside. So that would be third day momentum. Again, if it clears above 90, you're well postured. But it gets near 90, starts to hesitate, then this resistance says take advantage of the short-term move. Pfizer offers some opportunities here. This is basically a Z3 pattern, and you have higher lows. And if you can use this as 1R risk, just a retest of the Bollinger Band mean gives you about a little over 2 to 1. Getting back to the long-term RL270 value gives you about 4 to 1. So I like Pfizer as a tactical trade there. Now, AXP is interesting. It's a 5DD, even though it's got some of this pullback already. The close was lower, so 1, 2, 3, 4, 5. So that's a 5DD, but you can already see there's been some buying pressure. So I would be actually willing to, if it opened in here, I wouldn't mind getting in around 60 and a half, 60 and 3/4. Once it cleared this this bottom, you could wait, I suppose, as long as here to enter. Target would be at the Bollinger Band mean, then the far side of the river. I'd be placing a stop either here if you're aggressive, here if not. This would certainly be the place where I would stop and reverse and then expect a move from the same move that you got from 63 to 60, a $3 move would take this down to about 56 and a half. So that's a pretty nice frame in my view for AXP. Let's get back to the reports. Inside the ETFs, you have some RSI2 values that are below 10 that are highlighted. Plenty of dojis and some channelings to get after. Gold and silver remain attractive on a reward to risk basis, as do treasuries. Let's take a look at treasuries and XIV. Now, treasuries has been having some exceptionally nice swings inside here. So if it can find support down here around 132, then targeting 136 is the midpoint. But again, further failure says that the size of this leg from here to here is the size of this next collapse. So I would be looking to get some intraday positions short on treasuries. If it collapses further, that's a really not promising view right there of the stability of the treasury market. Let's see what that looks like on a shorter term. Let's take a look at 30 minutes and take a look at Friday's action. Friday's just a big collapse here allowed for some intraday movement that was attractive, but not a very convincing sight. And there was a lot of volume traded on the downside, just trying to unload those treasuries. And this, to me, is the argument for Brazil right now for the next couple of weeks. That should continue to be attractive because it's a place to temporarily park. It's easy to see the value of stepping aside from the larger geopolitics, and you can see on a daily why Brazil has just been outstanding while the U.S. has suffered. And that's part of a longer-term structure of gains that the RL 270 is pointing out. Very attractive. You get these pullbacks to the 270, it takes off again, especially being backed by this kind of support. That makes this a no-brainer trade. All right, so that's everything I want to cover today. This is Ken at Tortoise Capital. Keep your risk measured and your powder dry.